Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwole, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
That we either have to have houses,
They want to make sure that there's a strong employment.
logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
Hi, welcome to Real Men of Real Estate. I'm your host, Steve Matley. Today, I'm joined again by Tunde Ogunwole and Brian Fox. And again, we are still on lockdown, but that's not going to stop us from getting together and talking about opportunities in real estate. Even now, while the world seems to be falling apart, there's a great opportunity out there for everybody. We just have to know where they are. Hopefully you checked out our previous two videos on some other opportunities that we presented. Today, Brian's going to share with us great opportunities that still exist and are coming up in the residential real estate market. Brian, what do you have for us?
Hey, how's it going, guys? So, well, to start, I want to talk about how we got to where we are. So I'm going to actually take you all the way back to 2008. So when the market crashed after the mortgage meltdown we had, there was a long period of indecisiveness where people were trying to figure out what was going on. What is to make of this? We don't have a banking system. Obviously, real estate, that was a horrible idea. Let's not do that again. But there was a whole population of people who hadn't gotten involved in that market. However, they couldn't get loans, major down payment requirements. There was a long pause where people thought this is not bottomed out yet. I don't know if it's safe to do this. And it took some time for people to engage that market again. And so during that period of time, it was very much a buyer's market, which meant sellers, they were having a hard time selling property. The market was very high. It kept going downward. And so when it turned into a buyer's market, buyers had the opportunity to ask for seller credits, ask for seller financing, ask for reduced prices. They would see systematic reduction of prices over time, ask for longer escrow periods, ask for all kinds of concessions. They would ask for credits for upgrades. There's all kinds of things they request because they had all the power. So once that started to level off out at a significant bottom level, and the market started going back up in the stage of the stock market, companies started rebounding, the banks got it back together again, money again, it started shifting. The balance from, which was originally seller market before 2007 to buyer's market after 2008 and into 2010, it started rising right back up into seller market. And the request ability to get seller financing, to have credits, to ask for reduced prices, it just started changing a different direction. There was a difference in inventory. There was more sellers and buyers, and then there was more buyers and sellers as it started to transition in. And so we've been doing this for roughly 10, 15 years now, and now it's 2020. And relatively, honestly, we've had no change in the economics. People have been very active. We have still an inventory shortage today, but what happened was we got thrown a curveball. And so I used to get asked the question quite a lot, which was, hey, we're super high. This is crazy. It's got to crash soon. And my answer to that has always been the same. Crash because of things that happen outside of our business that affect our business. So what I mean by that is if you look at the periodic times where we've had market issues, like the mortgage meltdown, that was actually the closest to home when it came to a real estate affected item by the industry of real estate. But if you look at the savings and loan scandals, if you look at the dot-com bust, if you look at 9/11, if you look at all these things over time we've had, ultimately they have not been real estate related. They were related to places where money was coming from, and they were buying real estate because real estate is a commodity like gold and silver. It's what people buy because they want to live there. Obviously, they want to invest in something that is secure and is protected by equity, but also because they see it as a safer space. And stock market is a short-term space, whereas real estate is usually a longer-term space. So right now what's going on is we've had this curveball come about us where they said basically you can't go out and do a lot of this business because you can't congregate with other people. And real estate agents, they had 2 days ago, they had a statewide of California. It's not different. Actually, every state's a little bit different, but the major states, California, New York, and I forget what the other ones are, but they had the Department of Real Estate said, you can't go and do these 7 or 8 activities. And unfortunately, those activities are very important to our ability to sell property, but they also don't want people leaving their houses. They don't want them going and seeing property for the sake of possibly being infected. So what it's caused is a dynamic shift in who holds the power. So what does that mean? What that means is that what was a seller's market up until a month ago has shifted, even if it's only temporary, into what I would say more of a buyer's market. We were really moving in this seller's market to an even market for most things, and my advice was pretty the same for most people. But once this happened, it was a shift in the balance of power. What that means is buyers, although they still have demand for property, have more power than sellers for the time being because sellers can't really show property very well. We can't allow people to have open houses. We can't tour people around and take them to property. So ultimately, also, there's also a lot of chatter about the market going down. And so people think this is a big deal. So buyers, if they decide to get into the marketplace, have a lot more property to pick from, even if inventory was low as much as a month ago. Inventory may still be low when it comes to a per capita basis of people who are looking to buy, but there's no one looking to make decisions right now. So if you're a person looking to make a decision, you can have a dramatic impact on the value you can pull out of a person who's currently a seller. This has happened for a couple things, but right now what I want to say is I also think this is kind of temporary. If you look at September 11th, at least in California, prices didn't change. It was a thing that happened. It was horrible. We all had to go through it, but it was not an economically driven problem. It was something that happened as an outside force, like an act of God, which is what this is. Everyone was working in real estate. Everyone was working in the stocks, and everyone's companies were strong up until the day they weren't, which means the moment we're all permitted to go back to work, there's going to be a heavy amount of pent-up demand that will take action where this balance of power, in my prediction, will shift. I don't know if all the way back or past it, but it's going to shift pretty dramatically back towards the seller because there will still be a pent-up amount of demand, and because they'll have a lot of comments and talk about the market being down, opportunity, get invested, you can get stocks at like 5 cents on the dollar, whatever that is. When the shift happens, everyone's going to do it all at once. When everyone does it all at once, it unbalances the discount you think you're supposed to get because you didn't take action before. Now, I understand the reality is there's concern there that you're going to get in and lose your money. And the thing is that you have to look at this not as an economically driven problem, but as an act of God problem. And if you can, you will start to look at the sequence of events that have happened that will probably right themselves because everyone who is able to go back to work will want to go back to work. And it's not a balance of anything other than that. So I'm going to share something on the screen real quick, and I'll walk you through some opportunities I see you being able to take advantage of in the residential real estate space. Short-term could be a month. Short-term could be as much as 6 months. We don't know, and that's the cool part with the uncertainty. Not cool part because we enjoy going through this, because trust me, we don't, but this is an opportunity. When I say this is an opportunity, if I said you can buy MGM stock, you can buy Carnival Cruise Line stock, American Airlines stocks, all kinds of stocks for 50 cents on the dollar today, you'd say, oh, that's great, I'll do it. No problem, because they're worth more than that. A month ago, they were worth that. And nothing has changed. Everyone still wants to take those cruises. They want to go to Vegas. I guarantee you will not get a room in Vegas the moment this thing is over. You'll have to wait 6 months before you can get another reservation because they will be booked out. But now they're not. And so that's the same thing with real estate. And so I want to show you a couple things and walk you through them and make it sure it makes sense. So in the real world of what's going on right now, excuse me. So some opportunities persist. The biggest opportunities are in times of uncertainty. On a previous episode, Steve and Tunde both suggested that the best times to capitalize on the ability to make money is in times where everyone else is walking away and you walk towards. But the thing with that is you have to walk towards with some smarts. And they said, you need to do your research. So I'm going to do my best to give you a really good look into the psychology of human behavior as we're walking through residential real estate. Because the fair thing is, although Tunde is very adept in the commercial world and Steve is also in land, residential has a much cleaner feel to it when it comes to psychology. People pretty much act towards residential real estate like they do towards the stock market. I'm going to walk you through it real quick. So we used to have a direct path. Up until a month ago, we had a very set way of doing things. We knew that houses were able to be sold. We knew that people wanted them. We knew that we had to make them look a certain way and price a certain way, and they would buy them. Up until the time when people said you can't go see them. And by the way, the stock market crashed because they're worried about companies going out of business, et cetera. But people didn't change their mind about things. They were forced to change their mind, even though they may still have the money. You may have some people out of work, but the reality is they've already created programs to make sure those people don't lose their money, their housing. They've already created a 12-month program for people to be helped during that time because they believe, the government, that all we need is about 12 months, honestly, and we think we'll be probably all through all this and people will be back to work making money again. So you have a period of time, but the trajectory has changed. Now we have uncertainty. In uncertain times, you have the opportunity to unbalance the power. So until this is all over, sales will be much slower than they were. However, in light of that, you have opportunity you would not normally have. So let's take advantage of the time we have with these opportunities. Number one, asking for seller credit, asking them for credits for closing costs, points for your loan. Right now, interest rates are at like 3% because the stock market is doing horribly. All that money has funneled over into the bond market, creating very low interest rates on 30-year term loans. But you could still ask for even seller credit. Say, hey, listen, I'll buy your property, but I want 1%, 2% back towards seller credit to make sure that I can have that money towards closing costs. Meaning you can get into property with almost barely your down payment, and that's it. You could ask for the seller to consider lower prices. You could ask them for lower prices. And although they may not want to, competition is going to be fierce for your intentions to buy those homes. So that might be a possibility. Asking the seller to wait for you to sell, I'm sorry, I misspelled that, sell your home prior to being able to complete your purchase. So if you had a home to sell, meaning you want to sell your house and then move to something else, you might still have that ability. You just need to make sure you negotiate properly for the purchase of your home to that home, because you want to make sure you give yourself none of a variance in what happens with your house for that house, but they might be willing to wait for you. Asking the seller for carried financing. You might even get a seller who is retiring, who just, look, I've been waiting. I want to sell this property, but ultimately I don't want to wait any longer and I don't want to take the risk of what happens next. They might be even willing to bank you for a certain amount of time. And then you could make some more arrangements for yourself. That's a possibility. It was very much a possibility when it was a buyer's market before, and it could happen in the short term now. And I'll tell you that my biggest interest is flippers. Let's not pretend that flipping hasn't become a part of our America's pastime. Every show across the country has something to do with flipping property, and it's great and it's also funny because we have so many worldly experts on flipping homes. I don't know somebody who hasn't flipped a house almost anymore. Even clients, they're like, they want to flip property, they're doing development. So I actually saw this coming a long time ago. When the market shifts, they're all holding properties with very expensive interest rates. Some are cash, but some aren't. But ultimately, the reality is none of those properties have been intended to sit, and they're going to potentially. Now, the caveat to this, they may not be all in areas that you want to specifically be in. So you might find a very amazing renovated property in Las Vegas, but it's not in the Las Vegas area you like. Well, you may need to think about that. But the reality is those people are holding on to property. Most of them do between 1, 2, and 10 properties at a time. So you might find yourself in a situation where someone has a significant amount of inventory, carrying loans at 10 to 15% per house. And those lenders would do very well to want to get their money back. And typically they're based upon loan to values that are subject to what they thought the homes would be worth. So you might be able to find good opportunities negotiating with business people who have tried to sell property that they renovated because they want to get rid of them. They do not want to hold these properties, I promise you. And they want profits, but they want profits they can capture. Even though they may think they want profits that they thought they would have, they may not get those anymore, which means you might be sitting a lot of inventory that you could scoop up, that it's fully renovated, ready to go, and you might be able to get that because you negotiate directly with that person who really wants to get those moving, so they don't owe these hard money lenders. So on that note, again, residential is a very simple system. It's very psychologically driven. No one, not many, I would say 10% of the market is out there looking for property. There are a lot of clients that we have at my company that are not tied to the economics of what's going on now, and they are doing stuff, but we built ourselves that way. The thing is though, there's a lot of people who are not, and there's a lot of people who have already lost their jobs. And although they may be able to keep the homes they have, they may be on the sidelines, and that may change how the seller-driven market will respond. So at that, I will open up to questions if you guys have any, but very passionate about making sure people do the best they can with their money. So if you guys have anything for me, help me out. I'll get an answer for you.
What do you got, Tunde?
I think, Brian, you did a great job of talking about the way that buyers can structure deals with potential sellers. And you really looked at, there's a pivot in what's happening with the coronavirus and how that's kind of interrupted this really strong run that we were on. I guess one of the questions I've got for you is, you're seeing this as a relatively short-term phenomenon. Are you encouraging buyers to act soon, get out there, take advantage of the deals, or do you think it takes a little while to really find a great opportunity? And from a timing standpoint,
yeah, great question. The unfortunate response is that the uncertainty does strike us all. So how long this lasts? Okay, so let me answer like this. If this thing is over next week, no one's going to remember it happened. It's going to be gone. They're going to get back into business real quick. If this thing lasts another 6 months, it's going to take people some time to readjust back to the way the world was, because they will have forgotten. It's the law of momentum. If we're moving in a direction at a certain speed with a certain amount of velocity behind us, it's hard to offset us. But if we're forced to stop or change how we're seeing things, if it's short term, it's not that big of a deal. But if it's long term, 12 months, Steve mentioned on a previous episode, we have bigger problems. The problem will be what people get used to. So if people are used to something for a significant amount of time, it's hard to change them from that course. But if you put them in motion on something for a certain amount of time, it's also hard to change them from that other course. So if we don't have to deal with this for longer than 2, 3, 4 months, we can all go. If even we get to go back to work in the next 2 weeks to a month, that'll change things on its own. Right now, people aren't allowed to live. As soon as they can start living again, they will have a much different understanding and feeling about what's going on economically around them, because they're no longer affected by the day-to-day. So it's a twofold answer. Are we recommending people get out there? I'm recommending some people get out there, because there's certain people that I'm comfortable saying that to because of their circumstances. Mm-hmm. Not everybody, because very, very case. So if I have a client who, give an example. I have a client who their down payment was, a lot of it was their stock options, the company they worked for. Well, their company stock went down by 50%. I'm not recommending they do anything, because they need their stock money back to do their down payment. But there's other clients who have a thing to sell. They have to sell a property, and that home that they had to sell had a very tight margin on what they needed for down payment to go in their new home. Well, now if I can negotiate a little bit more strictly on their new purchase, this sale is not as detrimental to our ability to move into a new property. So there's reasons for each person being able to do something. I think it is very much something you need to think about, but there are opportunities. And if you understand how to strategize what the downfall you had before was and figure out how to implement that in a deal now, you might be able to get something done where you thought you couldn't before this all happened.
I look at a couple of things in here, Brian. One is, as you mentioned, the timing has a lot to do with this. Is this like the 9/11 terrorist attacks, where within 57 days we were kind of back to normal again? Yeah, we did have some elongated wars, but it didn't really affect the people living here so much. Everything else kind of went back to normal. We actually had a big boom during that time, versus say Pearl Harbor, where for 4.5 years the whole world turned upside down and nothing was the same when it was over. So it depends on how long this goes on. I tend to think this is a more temporary situation because of the nature of it. It can't go on that long without wiping out how much of the population of the planet. So I don't see it being that dire. It's a serious deal, but it's not I don't think it's going to be going on for years or anything like that. There's a couple questions I have though on doing the transactions. Trying to actually execute the closing documents when you can't get a notary or witnesses in one place is one issue. How do you do a home inspection when nobody wants you in the house? You can't go there. And how do you do the appraisal for the same reason? Does that create a delay in getting transactions done right now?
So far, it hasn't. Some services are still considered essential. Appraisers are still considered essential. And so people are still able to get appraisals done, inspections, sort of. But again, there's a complete lack of the actual need for those people right now because people aren't transacting nearly as much. I'd say 10% maybe are transacting or attempting to transact. Some have needs that need to happen right away. Like I have some friends who they've got to get something done right away. And because they are tied to something like, let's say, fire department, doctors, lawyers, police department, they're not tied to this. They have jobs and they need to get stuff done anyway. So, but a lot of people aren't entering the space. So you still have the time with those people that you need, the inspectors and such not, but you just have to be strategic in how you do it. So there are extra layers of protection you have to make sure of. If someone lives there, you have to deal with that. So you have to deal with it, but their time, they have a lot more time on their hands than they did before.
Tunde, any final thoughts?
No, I think one of the things that makes this this focus on residential really important. Everybody needs a place to live, right? Everybody needs a place to live. So whether it's the single family space where there's a lot of the fix and flip opportunities, you don't see that as much on multifamily, but you do every now and again. I think the fact that you really highlighted the fact that there are opportunities, you just got to really be patient to see where things settle, I think is a really good and encouraging message. So I want to thank you, Brian, for just really outlining how we got here and then outlining those opportunities.
Yeah, man, you got it.
And I think I look at what you mentioned about people going back with the pent up demand, and I see two different groups of people. I see the people that are delaying going back out due to an abundance of caution. I don't want to book a cruise. I don't want to go anywhere. What if we have another outbreak? Versus the people that are doing exactly what you said. I'm tired of cabin fever. I need to get out. I already canceled my vacation and my Disney trip, and they're going to rush out. But I don't really see that being a problem, because if even 25% of the people went to make up for lost time, you would see a huge surge in the production, because that's a lot of people all at the same time doing something. So even if we have some people that are cautious, I don't see that slowing things down. So we're about out of time here. We need to wrap it up. Brian, I want to thank you for sharing your thoughts and ideas on residential real estate opportunities right now that we don't want to miss. Again, do your homework before you do anything. Make sure you check out our website, realmenofrealestate.com. Check out our Facebook page, Real Men of Real Estate. We are on the Roku channel, Building Solid Foundations. We have a YouTube channel. Check us out. Please share this if you know somebody that needs to hear it. Like it if you like it. Make comments whether you like it or don't like it. We'd like to hear from you. And don't forget to subscribe to our channel, because we have new content coming out all the time, because we're not going anywhere. Literally, we can't go anywhere. So we're going to be sharing with you. We'll see you next time on Real Men of Real Estate. Stay happy, stay well.